4 things you need to know before selling your investment property. Hi there, I'm Nawar Naji, a real estate broker and investor in the city of Toronto. First, capital gains. Yes, the government wants its cut. They are your silent joint venture partner and they want to get paid at the end of the day. 50% of the profits are taxable at your marginal rate. Here's how to calculate how much capital gains tax you will owe after selling your rental property. For example, a purchase price of $400,000 and after so many years you sold it for $750,000. Your acquisition and disposition cost $50,000. This puts your profit at $750 minus $400 minus $50, $300,000. 50% of that, which is 150 grand, is added to your income, and then you are taxed at whatever your marginal tax rate is for that year. The highest tax rate in Canada is 53%. For the sake of simplicity, we'll use 50%. So in this case, the capital gains is 50% of 150 grand, which is $75,000. It is a lot of money, I know, but government's got to get paid. A quick method to calculate your capital gains tax is 25% of the profit. So in this example, 25% of the 300,000 is 75 grand. Now, can you avoid capital gains tax? Probably not. But you can minimize it if you buy another investment property in the same calendar year. It is best to have that discussion with your accountant up front before you decide to sell it. They might advise you to sell this calendar year or wait to the following calendar year depending on your details and your situation. 2, tenants. There are 2 potential buyer groups for your investment property. One is end users who want to move in and live in that specific house or condo. And the second group is real estate investors. It is less desirable to sell a tenant investment property for a few reasons. One, it is difficult to show the property at its best. People live there, and it's really difficult to have it staged and show well. 2, there are less potential buyers who want to assume tenants. And this goes back to the end users who want to move in, they just don't want to deal with tenants or become landlords. 3, if the tenants are in a lease agreement, they have to be assumed unless they are month to month. And then you can give them 60 days notice. So keep that in mind. 4, 24-hour notice is required when booking a showing to see that specific property between the hours of 8 a.m. and 8 p.m. There might be cases where the tenants will allow for less time due to work or family obligations. So you'll have less than 12 hours during the day to show that specific property for sale. 3, documents. Since you're selling your business, it is good to have your documents in place. Lease agreements, latest rent increases, what market rents are in the area, income statements, etc. Your real estate agent should be able to help you to put that package together. 4, vacant possession. If you can come to an agreement with the tenants to leave before you put up the property for sale, that would be ideal. Just make sure you're selling the property and not re-renting it, because you could be fined up to $25,000 if you end up re-renting that property. Having the tenants vacate gives you the chance to do the work and repairs to show the property at its best. It could be paint, minor repairs, you can stage it, do professional photography, videography, all that stuff to attract the largest pool of potential buyers. Another tip, make sure you use the correct landlord and tenant board forms. Stay away from text messages and emails and phone calls. Use the proper forms. Are you thinking of selling your investment property? Well, click on the link below and you can download my seller's guide. And until next time, happy investing.